Welcome to Club E. Hi, I'm Rick Brimacombe of Brimacombe and Associates. I am your architect of business growth, and I'll work with you to unlock the potential and amplify the scale of your company. Today, we're talking about franchising, what makes a successful model. I want to thank our sponsors, Irish Titan, an e-commerce and web development firm, Boulay Group, CPAs and advisors, Highland Bank, a locally owned community bank, Romaine Berg, a digital marketing agency, Minnesota Sales, a sales acceleration firm, and the Network Connect, the catalytic gateway for growing your company. First of all, before we get going, I'll pause. I'll give you a moment. Subscribe and like our Club E channel. It's right down below the video. Again, hit the subscribe and like button. That will allow us to deliver better content to you, our wonderful audience, as well as let you know when we're going live. I'd like to introduce today's speaker, Johnny Francis, otherwise known as Johnny Franchise. Welcome, John.
Hi, Rick. Thank you. Glad to be here. I appreciate it.
And it's not every day that somebody comes across somebody with a nickname as apropos as well as memorable as that, Johnny Franchise. John, tell us a little bit about how you got that nickname.
Yeah, well, someone has to give you a nickname to make it real. So growing up, I'm the youngest of 5 kids, and my given name is John. So my family all called me Johnny. I was little Johnny, right? The little kid. So all my friends and family call me Johnny Francis. That's my common name. And I was at a local franchise conference, and one of my good friends there, a lawyer by the name of Brian Schnell. It was the start out of the conference. We were all getting connected and how you been and how you doing and nice to see you. And Brian looked at me and he said, when I see you, I think of Johnny Franchise. And he kind of said it loud. He's a big guy like me and loud voice. And everyone around us had a good laugh. And it kind of stuck. That was the time he gave me that nickname, my friend Brian. And that was about 5 years ago, maybe. So it took me a little while to really embrace it, and actually to get the URL, someone else had it. I don't know why, but when it finally came available a couple of years ago is when I really embraced it, and I think it fits pretty well.
Absolutely.
Yeah.
Very fitting. Very fitting. All right, John, tell us a little bit more about yourself, your background, your firm, and the various things that you're up to.
Sure. Well, thank you. As I mentioned, I'm the youngest of 5 kids, so I was the lucky kid, I guess. Growing up, my dad was a barber here in St. Paul. He cut hair, and he, together with my mother, actually franchised barbershops back in the 60s, before I was even born. He was a fabulous barber. He was really good at it, but he was frustrated that he said it's going to be hard to get rich cutting hair one head at a time. So one thing led to another. He franchised barbershops, which really was pretty innovative. At the time, there were hotels and gas stations and restaurants, but that was about it for franchising. It was very early in the franchising. So as I was growing up, I thought everything was a franchise. I thought everybody owned their own business or 2 or 3, and I thought everyone worked for themselves except the people that worked for us. So I thought everything was a franchise. And then I, of course, grew up and realized, oh, no, not everything is a franchise and not everything should be a franchise. But I grew up in our family business. We franchised, the parent company was called The Barbers. And in the 70s, that was the main brand, The Barbers hairstyling for men and women. Kind of a big deal here regionally. But it was a national brand. And my dad actually took it public over the counter on the pink sheets back in those days, and grew the company, and kind of a long entrepreneurial story. He went through all the typical ups and downs and sideways, had a lot of struggles, but he was a great guy, worked really hard, and had a lot of good people who helped build that business. So in the 70s, it was The Barbers was the name of the company. And in the 80s, we developed a brand called Cost Cutters, which was kind of low price, quick service, a different segment of the industry, and franchised that, and that went very well. Later in the 80s, we developed a brand called City Looks, which was kind of a high-end spa concept, kind of full price, full service, nice model, nice business. And we converted a lot of the old barbers because that was sort of a fading brand at the time. The market was changing. In the 90s, we did some international franchising. I got involved with a lot of that. We did some acquisitions. We bought regional brands and converted them and franchised them. I got involved with that, and I worked through our business for, my whole life up until we sold the business in 1999. We sold that business with just over 1,000 stores. So that was like 20 years ago. We sold our company, and it was a great outcome for everybody. I took my little sliver of that and went off and did a few more franchise deals of my own. I was a regional developer and a franchisee for a brand called PostNet. I was a franchisor, a partner in a brand called Inner Circle. I forgot to mention, we sold our business to Regis Corporation here, which 20 years ago was a lot different than it was today. But Regis had another brand called Supercuts. I got to work with that brand for a little while. They're a great big company, Regis. And so I've been in and out of a number of different brands as a franchisor, as a franchisee, as a developer. I've been what's called a supplier, which is a vendor that sells products and services to franchisors and franchisees. I've been involved in the industry association. It's called the IFA, the International Franchise Association. Served on their board 2 times. I'm still involved in some of the committees there. Been participating in their conference for over 30 years. So I love franchising. It's what I know, it's what I do. And when everybody does their part properly, I think franchising is one of the most powerful, successful ways to do business. When it's done well, it's very powerful success creator. Everybody wins when it's done properly.
And in addition to all that, you now are an advisor to a number of companies and on some boards.
Yeah, the last business I sold, my last thing was 2011, 2013, I think it was Final, when I finished all my operating business and kind of went on my own as what I call a reluctant consultant to the franchise industry. And I started doing board service. I serve on 7 boards today, which sounds like a lot, but it's very manageable. 3 of those are board of directors and 4 of those are board of advisors. I do some speaking to franchise companies. I do some coaching and consulting to franchise companies. And I just am launching a video program for franchisees to help franchisees really get the most out of their franchise business. So I want to do my thing. I work from home. I've got some kids at home still, so I'm focused on my family and trying to make the most of the opportunities and the experience that I have. I love helping people with their franchise business. That's really all I want to do, is help other people get it right.
Yep. Well, I've seen you do that from a firsthand standpoint, and that you've worked with some of the companies that I'm involved with too. So I appreciate your support there.
Yeah, thank you.
All right. Before we get to the rest of our event, a reminder to the audience that you can ask questions. Put your questions into the comment field. Today's hashtag is franchising. Hashtag franchising. And then in addition to putting your questions, one winner will receive a free hour consultation with John. Again, Johnny Franchise. Hashtag franchising. And again, one winner is going to get an hour with John. All right, John, as you look at various franchisors and franchisees, what are your top kind of couple of keys to success for folks in the industry?
Well, it usually starts with the franchisor, because they are the one that has the business, the model, the brand. So a successful franchisor really has a number of things. Number one, they've got a business that works. It's operationally sound. It's proven concept. It's economically viable. It's profitable. I don't know anyone who does a nonprofit franchise. I'm sure there's some variations out there, but it's a good, successful business model foundation. Number two, a franchisor success really comes from focusing on their franchisees. When the franchisor is focused on the successful franchisees, that becomes their focus. When that's done properly, that creates that kind of self-fulfilling interdependence where both parties really win from each other. The relationship has to work for both sides, but the franchisor needs a good model, needs to be willing to innovate that model and keep it fresh, keep it competitive, and stay current with the markets and the industry and competition, which is, of course, inevitable. When you're successful, you're going to have some copycats, and you need to be able to stay competitive and stay ahead, but really support and focus on successful franchisees, not just lots of them, but good ones. So quality over quantity would be My advice for the franchisor, it's certainly not easy. Franchising is expensive. It's regulated. It's like anything. It's never as easy as it looks. But I can tell you, it can be very rewarding because franchising creates a point of leverage for a brand, for a franchisor. It really creates some great opportunities. For the franchisee on the operating side, those are the people that come along and buy the deal. They invest in that concept, open that unit, whatever it is, kind of business, and then they run that business. My advice to a franchisee basically is follow the model and stay close to the franchisor and stay connected to the other franchisees, because franchising is a team effort. Franchising is a collaborative process. When you're connected and involved and engaged, doing your part as the franchisee in your business or your market or your area, wherever you happen to be, but you want to stay connected to the franchisor and you want to stay connected with the other franchisees, because the stronger you become together, that benefits the whole brand. And a lot of good flows from that, I would say, alignment and collaborative effort. So you got to stay constructive, you got to work hard, and you really got to stay focused on implementing the franchise business, the whole model, everything about it. And some of it's maybe not so obvious why things are the way they are. But that's the advice to the franchisees: stay focused and implement that business and share everything that works, share everything that doesn't work, stay connected and communicative and stay positive and constructive. And chances are you'll have some great success with that franchise business.
So the inverse of that, and obviously we're making a generalization, and that just covers part of a situation. But what characteristics do you commonly see when franchisees fail? So I think that would be a common thing that would come up is, gee, I don't want to do that because I think I might fail. But are there some characteristics that folks demonstrate, the ones that don't work out?
Yeah, yeah, and again, it's on two levels at least. The franchisor, when the franchisors start to fail, usually what I see is they lose sight of their franchisees. They forget that they're in business together. They start focusing on themselves and their profitability. Sometimes that shows up in a culture of us versus them, which is a horrible thing in a franchise business. If you're ever thinking, well, it's we're the corporate, we're right, and those are franchisees, they're wrong, you're doomed. That's the beginning of the end. So culture is critical for the franchisor. And then the economics. When a franchisor, I would say, gets greedy, maybe that's the wrong word, but when they start nickel and diming the franchisees, start charging them more fees or add costs, or trying to find another way to make more money off of the franchisees, and they lose sight of that collaborative success, that again destroys culture, but it really destroys that relationship and the trust. So that's when franchisors fail. The other thing franchisors sometimes fail is they forget, or they stop innovating. They stop reinventing or innovating or evolving or developing or changing or improving. They get complacent, they get lazy, they think they're the best and the biggest. Maybe they were the first. And if they lose sight of that, they'll get passed up by a competitor, or someone else will come along and buy that company when they start to struggle. I've seen that. I've done that as a franchisor. So it's a balance of success and innovation and commitment to your franchisees being successful. On the franchisee side, the operator side, when the franchisees typically fail is when they think they have a modification, they want to change the business. They think, well, that's fine, but it would be better if I did this. And they change that model. And my advice is, don't do that. Don't do it without talking to your franchisor about it first. There may be a good reason. They may have tried that, and there's a reason that component doesn't exist in the model. And frankly, you want to get their blessing and their support. Maybe they'll let you test it, or maybe it'll work in one model, but not the other. It would be good in a new store, but not an old store, or whatever. There's variations across a brand that you have to consider. So don't change the model. Don't change it on your own on a local level. If you want to really change something, talk to the franchisor and bring that innovation through appropriate channels. The other thing, franchisees, when they fail, is when they stop going to conferences of the brand, or they stop talking to other franchisees. They get complacent, they get lazy, oh, I don't want to go. I know it all. I've seen it all, or I can't afford it. That's the kiss of death. I tell those franchisees, then you should sell your unit to someone who can, because you're going to fail, and get out of it while there's still some value. So franchisees that disconnect from the brand, typically that's a bad indicator. I mean, there's all kinds of reasons that people have challenges and struggle, but those are kind of the common trends I see. But franchising is not easy. Nothing's easy. And it takes a lot of work. It takes a lot of effort. But if you do it properly, again, you've got that collaborative approach with the corporate system and the other franchisees. It's a powerful combination.
Yeah. So I have a two-part question. First of all, in a tough economy, is that a good time to become a franchisee? And then the second part, and again, kind of rule of thumb, which I know is a little dangerous, but if somebody was thinking about looking at becoming a franchisee, is there a range of economic checkbooks folks should have to think about it, from X to Y? And if they have that kind of nest
Sure.
egg to work with, that's a good amount to look at becoming a franchisee.
Yeah, I can answer both those questions. A little recession is a good thing for franchising. When people get laid off in a normal recession, an economic recession, people are getting laid off and they're frustrated. They just lost their job. They've realized they've been working for somebody else for so long, and they're getting a paycheck
Oh, no.
that's great, but they're not building any equity. So franchise sales goes up because people are leveraging their home equity, or they're rolling over their retirement accounts and they're investing in their own business. So this time with this COVID crisis, it's not really an economic recession, although it's becoming one. A lot of brands are seeing franchise development pick up again for kind of the same reasons, but it's different in certain categories. The businesses that are forced to shut down during this COVID crisis, a lot of the restaurants and things of that nature that really can't fully operate because of the regulations and the health codes. So some segments of franchising are actually seeing a nice lift during this COVID crisis. But generally speaking, franchising is good when it fits you as a franchisee. There's always better times or worse times, but it's got to be right for the individual at that time. And then your second part of the question around the investment level, I like to say there's really kind of three levels of franchising. I would say the first level is total investment of probably $50,000 and less. You can buy a nice business franchise for $50,000 and less. Those are typically home-based or mobile-based. They might be service concepts where you're out doing services or selling services or doing things of that nature. There's some great businesses. I've got clients that have very successful models, and their total investment is at $50,000 and less. The next level I would say is between 50 to maybe 200,000. That's a big range, I realize, but those are usually storefronts, right? You're opening a unit, you've got equipment, you've got build out, you've got rent, you've got staff, you've got, it's a more complicated business operation. A lot of the smaller restaurants fall into that. A lot of the service retail, again, more of the mobile van-based or mobile-based franchises. There's lots of stuff that fits under that 200,000. And most people don't just write a check for that. You go to the SBA, or you go to your local banker, you leverage your house or your retirements, and you finance maybe half. I think is a general rule of thumb. I'm not a finance expert, but if you finance more than that, you're just working for the bank. You want to work for yourself. And then the bigger franchise deals are the 200,000 plus. I mean, you can buy big freestanding restaurants where you own the real estate. That gets very expensive. There's certainly hotels that are big investments, $1 million, multi-million dollar investments. So there's a wide range of franchising, but generally I would say it's a 50,000 and below is kind of the entry level or very affordable level. The 200,000 and below is kind of I would say the bell curve, the bigger part of that range of opportunities, and then the 200,000 and plus. And then sometimes you want to get into a brand where you might buy one and have success, and then you buy 2, 3, or 4, or 5, or 10, or 15, or 20 of that same unit. So you can multiply that investment and spread the risk, but it adds complexity when you go from a single unit to multiple units. But that's another dimension of considering the investment possibility.
Okay. And you mentioned early in your answer the COVID shutdown. What if there are specific things that the COVID shutdown has done to shine a light on the benefits of owning a franchise?
Yeah, well, I think it has proven that franchising has its advantages, and one of the advantages is when you're in a franchise, you're working on your business, but you're not alone, right? You've got a franchisor, hopefully, that's doing a good job of keeping you out of trouble and keeping you informed. So, as the stimulus programs came through, the PPP program was a great example of this. All of my clients that I work with, we spend a fair amount of time getting ready to understand that. It came on quick. There was a lot of anxiety. Obviously, people were, kind of freaking out about, well, how do we do this? What do we do? How do we apply? So the franchisors, all of them that were ready for it or prepared for it, they got a lot of information out really quick to their franchisees. So those franchisees were better informed and better prepared to take advantage of those programs. The industry association, I mentioned the IFA, they put on a tremendous amount of effort on lobbying. They were at the table as the SBA was putting that program together. They actually added some specific language for franchising as an advantage, which streamlined the process. And they provided great resources, lots of webinars, lots of videos and things, and just resources for the members. And actually, they offered it to the public. You didn't have to be a member to log in and watch those webinars. They prepared people on how this is going to work and what to consider and how to do it and how to get it. And when it came through, I think franchisees generally were better equipped and got a bigger part of that stimulus package, where I think an independent owner, didn't have that kind of support and resources. Maybe they had a chamber of commerce, maybe they had a relationship with a local banker, but they didn't have that collective horsepower that franchising really has. So I think the other flip side of this is, as this COVID thing carries on now, and there are a lot of businesses that are not going to make it. I think by and large, a lot of those brands or stores or units or businesses that are not going to survive are more independent operators because they don't have the training, they don't have the support, they don't have the resources, they don't have the things that a good franchise has. A lot of franchises actually that I'm working with are expanding right now. Not only are they selling more business, new franchises, those existing franchisees are taking advantage of the vacancies and the reduced rents that are out there in the marketplace, and they're opening more stores in shopping centers. There's examples where the center was full and no vacancy, you could never get in there, but now somebody went down. There's a dark spot in that center. They're talking to the landlord, let's take it and put one of our stores in. So there's some opportunities in the chaos, that's for sure. And I think franchising as a category is going to move forward beyond this crisis. And I think the independent operators are going to, they're going to compete, and the good ones and strong ones will survive. But I think it's a lot harder for those independents to stay competitive with this kind of situation.
Yep. Okay. Reminder to everybody, hit subscribe and like to our channel, as well as we are now in podcast form. So all your favorite podcast platforms, you can find the Clubby channel and listen to Johnny Franchise, as well as all the other folks that we have been interviewing. Also want to remind folks that if you want to submit a question, the hashtag today is #franchising, as well as to get your name into a drawing for an hour consultation with John. All right, John, you mentioned coming out of this, franchise systems might be better positioned than the independents. For somebody who maybe got laid off because of the COVID crisis, or maybe this gave them a chance to reflect on how they were spending their time, and they just wanted to alter their lives or what have you, and they're considering buying a franchise, what should people look for when they're looking at buying into a franchise business?
Well, it's a good question, and it's a question I get a lot. Hey, I'm thinking about buying a franchise. What do you recommend? And I say, the number one thing I say is take your time, right? A lot of the franchise salespeople that are involved in the process of selling franchises, part of their, I used to do that myself. I understand how that works. A lot of the time they're moving you through a process and they've got a timeline they want to keep you on. And so my advice is take your time, put it on your time frame that you're comfortable with. If you can move quickly and make a good decision quickly, then go ahead and do it quickly. But if you need more time and you want to do more analysis and really have certainty, then that takes time. So don't be afraid of modifying the expected time range. Number one, I think is key is you got to really have passion for the business you're buying. You know, if you don't like animals, you would not buy a pet grooming franchise, right? If you hate children, you would not buy a child care or an educational, you know, you have to find something that you truly like. You want to be proud of that business. You want to have a natural affinity, a natural enthusiasm. You really have to like the business. And it may not be the nuts and bolts of the business, but it might be the outcome or the creation, the results that the business produces for the customers. So there's a lot of franchises. There are, I think, over 4,000 brands out there that are franchising today. And I think there's probably more than 500 new, well, in a typical year, maybe not this year, but there's usually, I think, between 300 and 500 new brands every year that come on the market. So they don't all survive. That's the truth. A lot of the new ones are certainly exciting and interesting, and they are great with sales and marketing. So number one is know what you're buying and take your time and have some enthusiasm, I guess would be number two. Number three, understand the total investment. It's buying the franchise and opening the store. You need working capital. You need a certain amount of debt maybe that you're going to take. You might lease equipment or vehicles, things of that nature. But you also need to know the cost of ownership. There's certain things you're going to need to pay for, and that business is probably going to lose money for a while in that startup phase. And that can take months. Sometimes it can take years, kind of depends on the scale and the scope of the business. And you've got to figure out what you can afford to make the investment, but then number two, make the commitment to stick with it and ride that out. You might not make money for a year. I used to have people say, I need to replace my 100,000 a year salary. I'm like, great. Do you have $1 million to invest? Because, you know, if you can find, no, and he says, I got 75,000. I say, okay, you want to invest 75,000 and make 100,000 the first year. I say, when you find that, call me back because I'll buy 5 of those, right? There's nothing like that. It's unlikely you're going to find that kind of return on investment the first year. So be realistic about what you can afford for the startup and be realistic about what you can afford for that startup phase before that business turns cash flow positive or profitable. I guess the other thing to understand is, you know, look closely at the brand, do your homework. I tell people very often you need to spend time in that brand. Go visit other franchisees. Spend a day with those franchisees. Spend some time with the franchisor. What kind of people are they? What kind of history do they have? What kind of decisions do they make? How do they deal with adversity when things go wrong? Are you going to be thrown into a lawsuit or litigation to get things straightened out? Or are they collaborative, positive, reasonable people? You know, franchising is not easy. Nothing's easy. You're going to have some surprises. You're going to have some struggles. So the more you know about the brand that you're buying, the business and the people that are involved, you know, look at those things and make sure that you're comfortable with that. Make sure they have the same kind of values that you have. The other thing I guess I would say is, you know, the bigger the brand, usually the safer the investment. So a lot of brands might have 500 units, and that's a pretty successful, pretty big brand. That's, I would say, probably a national brand at 500 units open. And there's not a lot of risk involved with that brand failing. If they're that big, chances are they're making enough money, they've got the systems and scale, they're going to make it for a long time. If a brand has 10 units or 20 units, that's early. And that brand can change quite a bit in those early years. I like to say, you know, if it's less than 50 or less than 100, that's kind of the, you know, I hate to say experimental stage, but that's when a brand is still evolving and developing quite quickly. And what you bought when you bought it might not be the same business a few years later. Things change and innovate, and some of those brands don't make it, they get acquired or integrated into other brands. So that's a little riskier, if you will, on the face of it. So look at the brand, look at the size and scale of the brand, look at the people, and then obviously the business and the investment. I think all of those are very important considerations when you're looking at buying a franchise.
John, and we also have a couple of questions here.
Sure.
We got one from John. Aside from the business model and finances, what are some common fatal flaws in people's motivation or personality that increase their risk of failure?
Oh, well, I think getting greedy is just never a good idea. When people are trying to cheat, franchising is based on a lot of trust. It's a relationship, really, and the relationships with trusted relationships take time to build. It takes years sometimes to build that kind of trust, but seconds to lose it. When franchisees are looking for a way to cheat the system, maybe not report all their sales or find a different product that's less costly, but they think it's just as good. So, but you're sacrificing quality and you're really destroying the relationship. So when the franchisee or the franchisor, by that way, either side is trying to take advantage of the other, and they lose sight of that alignment and that collaborative effort. If they try to get greedy for themselves, they're looking out for their side first. That can create a problem. The second part or second answer to that question is, I really think that franchising is built on collaboration. So if you're the kind of person that has to do it your way, or if you're the kind of person that always has to be correct, like I'm right, you're wrong. And if you have that kind of personality, then franchising is probably not for you. You should go start your own business, and God bless you. Good luck. I hope it's successful, because franchising, I think, requires a certain amount of give and take. You're going to learn and you're going to apply and you're going to execute as a franchisee. But there are probably things in that model that you're not thrilled about. Maybe it's the fees, maybe it's the restrictions, maybe it's other components or aspects of that business that you don't really understand or appreciate, but you kind of have to do it anyway. So you have to be able to get along. And then I would say when things go wrong, and something's going to go wrong, you're going to have some challenges if it's a long-term deal. You have to be able to work out those differences and be reasonable. If your first instinct is to call a lawyer and file a lawsuit, I would say don't go into franchising, because that's never going to help you. You might win, but you're going to lose. You know what I mean?
Absolutely. Absolutely. So a reminder to everybody, hashtag franchising. You get into the drawing to spend an hour with himself, Johnny Franchise, as well as you get a chance to ask any questions you might have. And John, we have another question from River. For young, successful, and unique businesses, how do you recommend that they focus and prepare to be able to franchise the company at some point in the future?
It's a great question. And again, it's another question I get all the time. Hey, I've got this whatever business and I want to franchise it. How do I do that? So you want to franchise your business. I say, that's great. Prove it, right? The first thing I would say is you've got one unit open. That's a success. That's great. I call that an accident. Go build another one. Build number two and make that second unit successful, and do it in another city or another state, not just across town. But if you're in Minnesota, go to Wisconsin or Iowa. If you're in Colorado, go to Utah, or just go somewhere else and do it again. Prove that model. The second one is an accident, or I'm sorry, coincidence. The first one, success, is an accident. The second unit's a coincidence. Then go build the third unit. Third unit is a pattern. If you can build 3 units in 3 different markets, now you're more prepared to franchise that business. You've done it enough. You've gained the experience of opening those businesses. You've probably built some training systems, some financial modeling. You've gotten vendor information and supply chain things figured out. So build more than one. And once you've got to 3 or maybe 5, now you're probably ready to franchise. You've gone through trademarks, you've got training and marketing and all the different systems that a good brand has. And that's what the franchisee is paying for. The franchisee is going to pay you a fee to get into that business, and they expect that you figured it out. You're going to show them how to do it and do it successfully. You're not going to experiment on your franchisees. That's not what they're buying. They're buying a proven model with a proven system with people who know how to do it. So until you've done that for yourself, I think you really are unprepared to franchise. The second part of that answer is franchising is regulated. The Federal Trade Commission regulates franchising. So there's regs involved. So that means lawyers, right? You got to have a disclosure document. That's going to cost you some money, and you have to update that and register it every year with the feds. And I think there are 14 states that are registration states. There's also a required financial audit that needs to be done every year. And accounting and regulations. Again, it's not easy, but you need to be prepared for those costs when you start, and you need to be prepared to manage those costs and maintain that integrity of the brand to be a long-term franchisor. So take your time, get it right, make sure it's proven and well-developed, and then treat your franchisees with gold. I would say the first 5 franchisees are critical, because you want them to be good people who have enough money and enough work ethic and skills and pay attention, and they can execute. You want your first 5 to be winners. If one of your first 5 franchisees fails, that's going to slow down your growth, because the new guys are going to check with the old guys, and we call that validation. If your validation falls apart, your franchise system is going to struggle. So be very selective when you're starting a new franchise concept.
Say the same question as I posed earlier about being a franchisee and having a certain dollar amount to be able to spend on the process. You mentioned lawyers, accountants, et cetera. How much does somebody have in the bank to think about even turning a unit or 3 or 5 into a franchise system?
Really, I would say at a minimum, it's probably $50,000 to become a franchisor, to get your documents done, to get your manuals done, to get your trademarks done, to get yourself positioned. You probably need a fresh website to franchise. You need to be prepared to support, qualify, and train. And I mean, there's just a lot. It costs money to do this and do it well. There are consultants who do this that help companies franchise their business. That happens all the time. Like I said, I think there's somewhere between 300 and 500 new brands that come online every year. So there's a steady stream of new concepts. And oftentimes you see it as a consumer. I do. When you see a successful business, like, wow, that looks really hot. And the next year there's 3 or 4 that are sort of lookalikes. They're the second, third, fourth, and fifth concept in the category. And a lot of people think they've got a new twist or a new angle or some other change, and they're going to come out with a new brand that does it better. So when you start, you have to stay competitive, and that's expensive too. So I think there's a lot of things you got to commit to be a franchisor. And there are books you can read. There are a lot of resources out there, lots of places you can go and educate yourself. Again, there are consultants you can hire and pay. Some are better than others, just like anything, but there's lots of them out there. I would say do your homework, ask for references, and find one that you think is a good fit for what you're trying to accomplish.
Okay. Reminder to everybody, subscribe and like our channel, #franchising to be put into the drawing for an hour with Johnny Franchise, as well as ask a question. John, this question came up the other day when you and I were talking. When it comes time to sell, what are the benefits of being a franchisee in a franchise system versus being a sole practitioner or solopreneur?
Yeah, well, I think that's really when the franchise model really pays off, is when it's time to exit that business for a number of reasons. Number one, franchises, if you've had one and been in it for a while and have been successful with it, they generally get a higher multiple when it comes time to value that business because the risk is lower. It's the buyer is buying the brand. They might be buying the assets from the seller, but the buyer is going to get training and support, not just from the seller, but from the franchisor. So there are better resources, more innovation, more systems, more updates, more successful aspects of that franchise that are more likely to continue for the buyer. So that adds value and that adds brand equity. So you get that equity back when it's time to sell. Number two, a franchise business is relatively easier to sell than an independent business. Again, for the same reasons. People recognize that, I'm not just dependent on the seller to learn all about this business. I'm going to go study this franchisor. I'm going to talk to other franchisees. I'm going to investigate this business and brand. Regardless of what the seller's giving me, I know what I can do with this business once it's mine, because there are other examples of this successful franchise in the brand. So franchising is, I like to say, it's easy to get out of, or I'm sorry, easy to get into and easier to get out of. Nothing's easy. I got to reiterate that. Getting in and making it successful, there's no guarantees. You still have to do all the right things and work really, really hard to be successful, just like any business owner. But when a franchisee has trouble, they've got somewhere to go. They've got corporate, they've got other franchisees, they've got suppliers and vendors. There are other guys like me out there who help people with their franchise business. And I don't really care what the industry is. If it's a franchise, I think I can help people with that business. But when it's time to sell, being a franchised business really does have its advantages. Real, true economic value, and actually speed of sale is a lot less complicated. The franchisor is going to approve that buyer. So the chances of you getting it back because that buyer misrepresented themselves is a lot less, because the franchisor is going to make them go through that application process and qualify. So there's some sort of built-in benefits when it's time to sell your franchise.
Okay. Thanks for sharing that. I think that's a great thing for folks to remember, and one that I don't think many people consider when they're looking to go into a franchise. So great point. Thanks for sharing that. All right, John, as we get heading towards kind of the finish line here today, if you had to leave the audience with one main point, whether it's reiterating something you already mentioned or putting something new on the table, what would you like to share as one main takeaway for our audience to remember?
Well, franchising is a great way to grow a business as a franchisee and as a franchisor. But not everything should be franchised. I've learned that. I've seen some brands that looked good but really didn't work as a franchise for lots of reasons. Nothing is easy. It might look easy. You might expect it to be easy, but really don't expect too much. It's hard work. Everything's hard work. And the key to success with franchising for all sides involved is stay connected, stay collaborative, work together in a constructive, mutual success. When both sides or all sides are making sure the other sides are getting a fair deal and really focused on being successful together, that interdependent relationship creates a win-win-win outcome. And when franchising is done well, when the franchisor does their job, the franchisee does their job, and the suppliers and providers do their job, everybody wins, because that business grows. It's success on top of success. I like to call franchising economic Darwinism, right? Because it's not just the biggest that survive, it's the ones that adapt and change. You got to work smart, you got to work together. And that's really kind of a key to success in franchising. So not everything should be franchised, but if you've got a good business or you find the right one that fits you personally and financially, and you can get excited about that business, if you do it right, you're more likely to have success and really benefit from that franchise relationship.
And I guess we got another question that has come up here from Darren Lynch. And Darren actually is founder and CEO of Irish Titan, one of our lead sponsors at Club E. So we appreciate the support that Irish Titan has given to Club E over the years. From Darren, one of the things I've heard is that you need to get 3 franchises up in 3 different geographies before you can really make it take off or secure that investment. You mentioned, John, that a little bit earlier, but maybe just dive into that with a little greater detail.
Yeah, I think the key there is that you really want to prove the model more than once. A franchisee buying a franchise unit from a franchisor they expect that that business is going to work in their market, wherever they happen to be. When a new brand starts, I say don't start one in Miami and the next one in Seattle and then New York City and then San Diego. You're just asking for trouble when you spread yourself like that. You'll spend your whole day on an airplane. Well, not today, but if the smarter strategy is to grow in contiguous areas where you've got some support, you've got some marketing, maybe you've got franchisees that can work together because they're nearby. You don't want them on top of each other, but you want to have enough space between them, but not too much. There's a balance there to grow at a normal pace. But I think the point that Darren was asking is, I think 3 units is where you've proven the model enough. The first one's an accident. The second one, success, is a coincidence. The third one, success, is now a pattern. And you want to have that pattern of success. You've learned how to build them. You've learned how to open them. You've learned how to keep them open. You've overcome some obstacles, some adversities. You've built in inherently into that franchise is the training and the value of having that experience that you're buying into. We used to say, my dad used to say, people say, why am I paying you a fee to buy this franchise? And his answer was, look, we've made all the mistakes and we paid for all those mistakes. You're only paying a tiny fraction of what it really costs that's baked into this system. So we just need you to make the commitment and pay for the fee because we're going to put you into this business that we know is successful. We've proven it over and over and over again. So that's really the example is you want to be able to say that with confidence, and you want your franchisees to buy with confidence that the franchise system they're investing in, they're going to put their time and money and heart and soul into that business is well developed and really ready for that kind of growth.
With the failure rate of startups being so high, I would imagine that the failure rate for franchisees is significantly less, by maybe orders of magnitude less than folks that would strike out for business on their own. Have you seen that to be true?
Yeah, I think in general it's true. Statistically, I don't have the numbers. In the old days, I would say 10 years ago, we used to say that 5 out of 10 independents fail. Half of them don't make it 5 years. And 90% of franchisees survive. So only 10% fail. But I'm not sure that those numbers are statistically accurate, right? The IFA, the association, has done some analysis. And I've probably seen those reports, but I can't remember them off the top of my head. But I think the truth is that franchising is inherently less risky because of the support, the training, the collaborative effort, the multiple units, the multiple people. You've got a lot of people involved in a good brand. You're not alone. You've got other people who are going to help you. They want to be successful and they want you to be successful. So by nature, there's some benefits there. And then like I said earlier, the other side of it is when a franchise fails, quite often another franchisee will come in and buy that unit. It won't actually close. It may not be the same owner. The guy who opened it may not be the same owner 5 years later, but the business stays open and they count that as a successful business. So there's a lot of that happens because franchisees want to scale. And sometimes it's easier, rather than trying to build a superstore or whatever the business might be, is just buy another one and then another one and another one. There are multi-unit, multi-brand franchisees out there today that have some tremendously successful businesses. They might have 5 or 6 different brands and multiple units in each of those brands, but they consolidate the back of the house, the payroll, the accounting, the development, the legal, the hiring. A lot of the systems can be complementary, and that allows for some tremendous competitive advantages for those larger franchisees that scale with multiple units and some that scale with multiple brands.
Okay. All right. So, John, we'll have to have you back to go into greater detail on all the interesting and unique things you've done over your career. But as you look back, and I know it'll be hard because you'd have to come up with one thing. Give us one little nugget about something that you learned in your career that you wish you would have learned sooner. And then after you answer that, I do have another question for you from our audience.
Okay, well, One thing I wish I had learned earlier, geez, listen better, listen to understand, not just to answer. I think I've learned how to be a much better listener. Yeah, after I got out of college, after I got deeper into my career, listening to really understand what the other person is saying, and maybe listening for what they're not saying, but really intend. That's a skill and a talent that I think it took me a long time to develop, but it's paid off really well. It helps me really be more effective. And I think if that was, that might not be a franchise thing. That's just a life thing or a business thing. But that's the one thing that comes to mind.
Yep. Well, I know that you do a great job with being a dad. In fact, we didn't even get into Father's Eve, but I know you've done a great job with being a dad, being a husband. So that listening comes in handy on those two fronts. And actually, before we wrap up here in a few minutes, maybe have you do a plug for Father's Eve. But we have a question from Scott Plum. Scott's a sponsor of Club E Minnesota Sales. From his point of view, question is, define what is failure. If it's sold in 2 years for a profit, is that a failure?
No, not a bit. I would say that's quite a success. If that's what the owner is looking to do, that's a tremendous success. I've seen franchisees, like I said earlier, they'll start with one unit and they'll get their experience and they'll get good at it. And then they'll go around a brand and looking for other struggling franchisees who, for whatever reason, are not having the success that they expected. And they'll take that franchisee and make them a fair offer. And that's not a failure. If the guy left, a failure would be, closure. You're done. It's over. Bankruptcy. I mean, I think that's, it happens. It's unfortunate, but to me, that's more of a failure. When a franchisee gets in and gets out, as long as they get what they want or get what they deserve, I think that's success.
All right, fair enough. So give us a little plug on Father's Eve here before we go.
Oh, well, thank you. I love being a dad. I'm a dad to two girls. I've got two teenagers right now, and it's the most important thing I'll ever do is try to be a good dad and raise some kids that might be okay, right? So I invented a holiday. It's called Father's Eve, and it's the night before Father's Day. So the line is that everybody knows Father's Day is for dads and family. It's the third Sunday in June. And as a dad, you want to spend the time with your kids or your wife or your dad, if he's still around. You want to do that family time. Father's Eve is the night before, and we say it's just for the dads. Consider it a dad's night out. And we get together all over the country to celebrate fatherhood. And we peak the night with an 8 o'clock toast to the dads. On New Year's Eve, you got to wait till midnight to celebrate New Year's Eve. Or Father's Eve, we got to back that up to 8 o'clock because I might go home by 10 o'clock. So 8 o'clock, we do a toast to the dads. This year, Father's Eve was online. Of course, we couldn't get together like we used to. Last year, 2019, Father's Eve was in 60 cities all around the country, and actually a couple in Canada and one in Mexico. And I'm a franchise guy, so everything kind of looks like a franchise to me. But this year, Father's Eve was virtual, only online. And we had about 7,000 guys that we reached through our event online, which was fabulous. We made it a fundraiser. This year, our charity partner was Children's Miracle Network. They support 170 hospitals around the country. And we think they're a great cause. And we're not a charity. Father's Eve is not a charity. We're a fundraiser. We want to raise money and give it away. That's what we think is a better function for us. And it's really important for the dads to get together, connect, share, and celebrate. And I think a lot of dads don't realize how important they are as a dad, not only in their family, but in their community, in their neighborhood, in their environment, whatever you happen to be in. The dads really do make a difference. So Father's Eve is a way to celebrate, connect, and share. And we think we're on to something. And I hope that someday this just becomes another holiday on the calendar, just like New Year's Eve or Christmas Eve or any other Eve that might be out there.
Well, it's a great effort and endeavor, John. You've touched the hearts of many folks who have participated, as well as the people who've benefited from the fundraising side of things. So thank you for doing that. Also, thank you very much for joining us today. Would love to have you back, have you tell us some stories about the various places you traveled to back in your franchising days, as well as maybe learn a little bit more about Father's Eve. Thank you, John, and I hope you'd come back and join us again.
Sure. Thank you. I'd be happy to. Thank you, Rick. I appreciate it. Glad to share.
Thank you.